Hey, buenas noches. No, buenas tardes. Hey, how is everybody? Glad y'all joined me. Look at me, 2 weeks in a row, where I'm supposed to be, when I'm supposed to be there. Um, hey y'all, what's up? How's it going? My computer does not look like it should, and I'm trying to figure out. Can y'all see the top of my head? Can you hear me? I had some technical difficulties. So if I'm talking and you can't hear me, please let me know. All right. So, so, um, I had a client recently who we were, going through their finances and we were trying to figure out or pinpoint like what could they do so that they could pay down their credit card debt and, get some other things lined up. And having some oh shit money, some in case of emergency money that came up. So I already had that in the back of my mind. Then I read an article that we will look at some of the data from today. And so emergency funds. Oh shit money has been on my mind. So I thought that was what we were going to talk about today. So glad you're here. I see lots of familiar names the um, in the chat. Big sis Julie, you know that ocean money is set aside first. Nothing is 100%. That's exactly right. And that's why we're talking about this tonight. So, if you happen to be watching this in the future or you are new here, that YouTube just served this up to you, well, welcome. I'm glad you're here. Welcome to the Picky Girl Nation. I am Adelia Abora Sade, although most people know me as Picky Girl Travels or Picky Girl Travels the World, because that's who I am, that's what I do. But I also am a financial educator, money coach slash relocation specialist who has kind of made my mission to help Black women get financially confident enough that they go after their dream life, whether that is traveling the world, that's moving abroad, that's opening a donut shop, whatever it might be. So on this channel, we talk about kind of all of those things. We talk about money, we talk about travel, we talk about living abroad. So glad you're here. If you are not currently subscribed to the channel, you should really take care of that and subscribe, and we'll get into this. We'll get into this. Those of you that have been around for a while, you have heard me talk about oh shit money. Um, I talk about oh shit money and I talk about FU money a lot because it is those two things that have allowed me to kind of create my own dream life. And I want that for you. So that's why we're talking about it tonight. I found this emoji online and I thought, oh, this is perfect. Okay, so let me back up a set. Found also some new settings on here, so I'm playing around. Okay, so we all know that emergencies happen. Things come up. As Big Sis Dula said, nothing is 100%. And it's a good idea to have some money to take care of those unexpected expenses, those moments when you go, oh shit, like, what are we going to do? How are we going to pay for that? Um, Now, I want to share with y'all a couple of, oh man, I got fancy and added animations, but apparently they don't come through on this. So y'all just gonna have to pretend that these come in one at a time. Okay, so um, here are some statistics that I found really interesting. The first one, 59% of US consumers are living paycheck to paycheck. This is from a survey that was done in 2022. Given the current state of things, I would not be shocked if this number is on the uptick. Previously in 2020, 2001, this number was actually 63%. Um, and here's the thing, if you are watching this and you are hearing this statistic and that's you, I don't want you. I know in some people's minds, they think, oh, folks living paycheck to paycheck, that's people who don't make a lot of money. That's poor folks. And that's not really true. This data is based on people who make at least $100,000. Okay, so what this tells me is that in the US, where most of you, a lot of you are watching this from, there are a lot of people who are not in a great position to handle an emergency should one come up. That's what this number tells me. Living paycheck to paycheck, that's not like we one of my uh big things is kind of removing the guilt and the shame about talking about money. This if this is you, this is not about, like, oh, you should feel guilty about that, you should feel ashamed. It's really about, this means if you are in this 59%, you are not in a great situation to handle an emergency should one come up. And so that's why we're talking about this today. So I thought that was really interesting, that the majority of Americans are living paycheck to paycheck. The next one, the one in green, 36% of Americans have more credit card debt than emergency savings. So to me, that gives us a little bit of an idea about how we are prioritizing things. Okay, can I move me out of here? Hold on. That's not what I meant to do. Ah, that is not what I meant to do. Hold on. This is what I meant to do. Okay. I meant to take me out. All right. 43% of US adults would pay for an unexpected emergency expense from their savings. So a little bit under half. So there are some people who have some savings, um, and that's where they would go to pay for it. And then the last one I found really, really interesting. 25% of people would accrue credit card debt to pay for a $1,000 emergency expense and pay for it over time. I found that really, really interesting because what that says to me at first glance is that if the option is to put it on a credit card instead of paying it for savings, that's telling me that you're some of those folks that don't have any savings. And so I want to dig into that a little bit tonight. Okay, I'm just checking the comments because I couldn't see the comments when I was in full screen like that. Savings are at a low, and month to month carrying over credit card debt is increasing. And here's what also stands out to me. Because of the situation we're in right now with inflation and rising interest rates, carrying that debt, opting to put it on the credit card, that's costing us more now than it had previously. Y'all remember 2, 3 years ago, folks were refinancing their homes for like 2 and 3% interest. Those days are not right now. Interest rates are up, which, if you're saving, is great. If you're in debt and you're borrowing money, not so awesome. Not so awesome. Okay. Interesting that you should mention this, Big Sis Dula. I was shocked that folks can't handle a $300 to $400 emergency. Um, $400, like when they do these kinds of surveys and ask people, like, are you in a position to handle an emergency, for a long time $400 was the threshold. That was the emergency. What I was reading in this article was that they're getting ready to throw that out of the window, and it's really looking to be about $1,400, I think. Yeah, it's about $1,400. So, okay. So what these statistics tell us is that folks are not saving. What I find interesting, and let's see if we can get this back up here. Not that. Okay. My picture is like in the wrong place, and I don't know if I can move that. Let's see. Ooh, can I? Oh, I can move me up here. Can I move me? I don't know. Are y'all seeing this move? Things I don't test out until okay. So, okay, so here we are. Look, they ask people like what are their priorities? And I don't know. Does this shock anybody? That's what I am curious about. The light blue is paying down debt. The darker blue is increasing their emergency savings. And the darkest blue is people who are focused on both. And they broke this down by generation. So the youngest folks, Gen Z, the this is my kids' age, and younger millennials, they are more focused. There's a bigger chunk of them, 46%, that are focused on increasing their savings. But then when you compare, like if you compare that to the overall 32%, if we look at everybody together in one group. So I don't know. Look at this, see where your generation lies. Do you fit these percentages or not? Um, it seems like, you know, to me, people are very concerned about paying down debt and savings, but it feels like savings has kind of taken a back seat. I don't know. Y'all tell me. How are you feeling right now in your life? Have has the current like economic situation kind of made you have to put some of your savings goals on hold? Um, is debt more of an issue? What I'm finding with more and more of my clients is that the debt thing is really their focus. Like if I can get out of debt, I can do X, Y, and Z. And then when emergencies happen, those unexpected things pop up, um, that kind of then starts that whole debt cycle all over because they've not been in a situation to save for an emergency. Yeah. Um, Glad to see more folk heading to retirement and prioritizing paying off debt. We're probably going to do a video about this maybe next week or the week after about like retirement, financial independence, and all of that. One of the things that comes up a lot is, well, how much money do I need? If you are carrying debt with you, you're going to need a whole lot more money in retirement to service that debt versus if you can eliminate it before you retire. That's one of the reasons that people try not to retire and still have a house note. Okay. As a millennial, I'm doing both at the same time. It's taking me longer. That's a question I get a lot. Is like, should I focus on paying off the debt? Should I focus on saving? I know that there are financial gurus who will tell you that you absolutely should not be trying to like save or invest while you have debt. I'm of the mindset that maybe you can do both. Um, yeah. Okay. All right. Jackie is I'm Gen X, was always a saver, but focused more early in my career, paying off my six-figure student loan. I'm currently debt-free except a mortgage. And then some of the millennials are like, ooh, I wish I could have a mortgage. Uh, okay. So I'm seeing a lot of you that are here today are kind of focused on doing both. Very interesting. I don't think that there is a right or a wrong answer. I think that, it's the answer that works best for you. Uh, I think the only right answer is not to ignore a lack of savings or carrying debt. All right. I want to show y'all some more of these graphs that I found really interesting. Okay. So, haha, that now I can see it. All right. So that's about what they're prioritizing. This is about by generation. Um, do they have more credit card debt than emergency funds or savings? And so I was a little surprised at um, the the number of millennials carrying more debt than they have savings. Although I shouldn't have been surprised, given that the millennials, a lot of them graduated in 2008, 2009, uh, when things weren't so great. Um, mm, let's see. I'm just looking through the comments here, trying to catch up because I don't want to miss nothing. Oh, wow, Lana, 37-year-old single millennial, no kids. Owning a house seems impossible, living outside of DC. For the millennials, my oldest daughter is a young millennial. She is 28. Technically, by some, she could be considered a Gen Z, but she's not. Have a conversation with her and you know it. And I see it with her because she compares her situation to where I was at her age. Like I bought my first house at 22, 23. And she's like, I can't do that. Yeah, the world is a different place now. Really, really is. Really is. Okay, let's go back to this big and me being small. All right. So, more credit card debt than savings. Okay. This just shows, where people's focus is as far as do they have more or less savings than they did a year ago? We're at a very weird time historically coming off of a global pandemic. Are we still in a pandemic? I don't know. But that was an unprecedented world event. We've never had anything quite like that with such an interconnected economy. And so, with the job loss that happened, with unexpected expenses, it's not a shock that, people might not be saving as much as they want to or what they were previously. Okay. So I found this really interesting. What is causing people to save less than they did previously? Okay. The number one reason, 68% people said inflation, rising prices, um, rising interest rates. And I was going to say, actually, rising interest rates would be a good reason to save more. However, if you have adjustable rate credit cards, adjustable interest rate, car loans or home loans, I could see how that might be a problem, change in employment status. So, those are all the things we were just talking about that there's a whole lot going on right now that is making it really hard for people to save. So, I want to acknowledge that like, yeah, I get that. However, we still need those shit money. Okay. Um, okay. Which one was this? I can't I can't see this whole thing. How do I make it go full? Yes. Okay. Now, I find it interesting that Gen Z is so worried about having enough emergency savings. I don't know. When you were 18, when you were 25, were you worried about that? I don't know that I was. I feel like as a Gen Xer, I am more concerned about that sort of thing now. So I was really surprised um, that the young folks were were so concerned about this. And then here we can look at it by income. I don't think there's a big shock there that people who make less are more concerned about, can I afford to cover an emergency, than people who make more. Not a big shock there because they're less insulated from those, which actually is more reason why they should have an emergency fund or an oh shit fund set up. um, what I find really, really interesting is that statistic about, if you were met with an emergency, how would you deal with it? That so many people would use a credit card instead of savings. I don't know. I That surprised me. I didn't expect that. Valerina said, next. I didn't think about anything at 22, especially not savings or retirement. So that's interesting. And I wonder if it's because some of Gen Z, some of their parents are millennials. I wonder if that has made them more aware. Is it that they just, because they're growing up with the internet. I sound like an old person saying that. But because technology is the way it is and how they access information, are they just more up on that sort of thing than we were? I don't know. I don't know. Okay. So let's talk a little bit about uh emergency funds. Mistress Newbie says, I just completed saving 6 months of emergency funds last week. Congratulations. That is no easy feat. Um, one of the things, like when I am talking to clients and they've got money, or they've got debt, they've got these things, or if stuff comes up, we that's one of the questions I ask about an emergency fund. We know why they need to have one. We know why we all need to have an emergency fund. There are unexpected expenses that come up that are not part of our regular monthly, weekly financial plan. And ideally, it would be better to deal with those with cash from an emergency fund versus having to take out a loan. And notice the language I use there, take out a loan, because putting it on your credit card is the same thing as taking out a loan. Your credit card is a revolving loan, it revolves every 30 days or so. So, or, like if it's something big, some people have taken out, a second mortgage, they've tapped into the equity in their home, all of that kind of thing. Um, I am curious here, of the folks that are watching, do you have a separate bank account for your emergency fund? Do you have a separate bank account for your emergency fund? Or are you in your head counting your emergency fund sort of as, well, I have this money in this savings account and half of that is my emergency fund? Do you have like a separate account that is away from everything else? Okay. A couple of you are saying yes, separate. And this is also separate from just your other savings that might be saving for a trip or what have you. Okay, Carla has a separate savings account. All right, all right. All right. There is a lot of folks who feel like, yeah, you need to put it in another bank. Basically, you don't want it to be someplace where you can easily access it and spend it uh, on things that are not emergencies. This is something I had to work with my oldest child on. Like, act like that money doesn't exist until you actually need it. Okay. All right. So that's one thing, is if you don't already have your emergency fund in a completely separate account, I would probably do that. Or like y'all hear me talk about the Ally high yield savings account that lets you break that account down into buckets. You could possibly use that as one of your buckets, but this is where it comes into you knowing yourself. Um, is like if you see it when you log into your Ally account and you see that bucket there, is that going to tempt you? If it's going to tempt you, I say have it in a whole separate other account. A question that I get sometimes, especially because um, let's say interest rates are pretty high right now. So let's see if I can show y'all this. Mm, oh, it's not gonna let me show because I have it in the other. Hold on. I have it in the other browser and not in this one. Okay. Yeah, yeah, yeah. Hold on. I'm trying to get situated, y'all. I thought I had this all set up. Okay. All right. So, I should be able to share this with you now. Here we go. So, we often talk about high yield savings accounts. Right now, high yield savings accounts are paying, a lot of them are paying like 5% interest. And when I say high yield savings, I'm not talking about like you're at Bank of America and you got a checking and a savings account. Um, these accounts, now this website is Doctor of Credit. They maintain a list of high yield savings accounts and they update this. And these are all FDIC insured or NCUA insured accounts for up to $250,000. And so for right now, today is May 24th, 2003. This is who is paying the most, and typically, they'll tell you if there is a minimum deposit, if you have to have a direct deposit or what have you. Okay. So, generally speaking, having your having your what do you call these emergency funds in a high yield savings account is going to be, separate from where you're doing everything else, um, is a good idea because right now they're actually earning some decent interest. Like that regular savings account that your bank has is probably paying less than half a percent, much less than half a percent right now is what I would say. Okay. So, doing that, I've had some clients ask me, well, like, especially when interest rates were lower, um, they were like, well, my bank isn't paying any interest. Can't I just invest that in the stock market? And then if an emergency comes up, I can sell my investment and then I have the money. And that's a very tempting premise. I know the stock market isn't doing so hot right now, but like 2 years ago, things were great. And that is a very tempting premise, except one small problem with that. Let's say that the emergency is a busted pipe in your house, and you have to meet the deductible before your homeowner's insurance will kick in order to get money out of your investment account, you've got to wait for the market to open so that you can put in your sell order. Um, it's got to be accepted, and then it's going to take a few days for that money to settle into your account. So it's generally a good idea to keep your emergency fund very liquid. Okay, so a high yield savings account, Greta mentions money market savings accounts, those are very liquid. Did somebody say something about CDs in here? Okay, thought somebody did. Um, T bills are over 5%. That's awesome. I don't know if I would put my emergency fund in there because, again, how long is it? If I need that money, I need that money. How long is it going to take me to get access to it? So that's something to think about when you're thinking about where am I putting that money so that I have it when a rainy day comes. Um, and right now, with interest rates being as high as they are, like a lot of times people are like, well, what about CDs, certificates of deposit? Um, Here's the thing about a CD. In order to get to take advantage of the higher interest rate, you've got to be willing to lock your money away for a longer time. And they penalize you if you've got to take your money out early. So if in order to get 5% interest on a CD, you've got to lock up your money for 60 months for 5 years. I don't know about that. Seems to me in this moment we are in history right now that a high yield savings account would be a better option. Okay. All right. So quite a few of you already have separate accounts set up. All right. So have that set up account. Um, the other question I get a whole lot is how much money should you have in your emergency fund? Um, what is that man's name? The guy who popularized the debt snowball and the debt avalanche. What is that man's name? I cannot remember it. Is it Dave? Dave Ramsey. Okay. Dave Ramsey, in his baby steps or whatever, one of them was to get a $1,000 emergency fund, I believe it was. And there are a lot of money folks I see who criticize that. They're like, well, what's $1,000 going to do? Well, if if it's the difference between getting your transmission fixed and not having a ride to work, that having that $1,000 is $1,000 less that you don't have to borrow. So I am not I what I want, because there may be somebody watching this thinking to themselves like, it's going to take me a really long time to save up $1,000. That's okay. Building the emergency fund, that is hard, especially if you're having trouble just getting from one paycheck to the other. But think about it. Let's shift our mindset a little bit and think about it in terms of whatever money you can set aside, that is money you don't have to borrow when and if an emergency happens. So if your goal needs to be $500 in the beginning or $1,000 in the beginning, there is nothing wrong with that. There is no shame in that. Okay. Because the whole point of having an emergency fund is to have some money on hand in case something happens. And if you can save more than $400, you're doing better than the vast majority of Americans. Okay. Um, just scrolling back up here because I thought I missed something. All right. So, how much should you have? Ideally, most folks agree somewhere between 3 and 6 months of expenses. And if you're thinking right now, like, okay, well, my monthly expenses are $4,000. That means I need to save up at least $12,000. And you, okay. One way you could look at it is um, Tiffany Aliche, the budgetnista, she talks about having what's your ramen noodle budget? Like if you just cut back on everything to the absolute necessities, how much money do you need a month? That's your ramen noodle budget. Okay. Okay. So if your regular expenses times three is you're just like, oh my gosh, that's a big ass number. Uh Think about what your ramen noodle budget would be, multiply that by 3. Let that be your first goal. That means that, like, if you lost your job, you would at least be able, to make the mortgage payment, make the car payment, what have you. But most of the money folks say somewhere between 3 and 6 months of expenses. And so it's not like your emergency fund is going to be full immediately. It is a process. And as many of you have pointed out, it's a process that while you're trying to save that money there, you're also having to pay down debt. And that's okay. Auntie Lou, I'm on a pork and beans budget. Okay, so ideally, you're aiming for 3 to 6 months. Okay. And that's going to take you time to get there. So, really, it's about looking at your financial situation and how much can you start putting aside today? Is that $5 every time you get paid? Is that $50 every time you get paid? Is that $500 every time you get paid? Because again, having that cushion, that emergency fund, that oh shit money, remember, that's what's going to help you from going into more credit card debt, from having to take out a loan. I was going to say from having to take out a payday loan, but you better not ever take out a payday loan. Those things should be illegal. They are predatory and they charge in excess of 900% interest. So that should never even be an option on the table in my book. Okay. But I don't want you to get discouraged by the size of that number because what's really important is, like I said before, whatever money you can put to the side, that's money you don't have to try and find somewhere else. Okay. So ideally, that's where you want to be. And that can take time. Like maybe think about, do I want to do, is this something I can do in 6 months? Is this something that's going to take me a year, 2 years? That's completely acceptable. I don't want anybody feeling like a failure, like, oh, I couldn't fully fund my emergency fund in 2 months. I'm a horrible person. No, absolutely you are not. That's it's very hard. Okay. Um, so having a separate account, figuring out how much you can start putting in that account right now. And then you need to make it a habit. It needs to be like a bill. So when you get paid and you are figuring out, like, I need to pay T-Mobile this, I need to pay such and such this, you need to pay yourself. You hear me say, pay yourself first. You've heard that term before. This is what that means. This includes funding your emergency fund. Okay. Um, so it needs to be a bill. That's a mindset shift. It's something that has to be paid every time you get paid, every month, however you're doing it. It's really best if you can set up like an automatic transfer so that it's not even something you have to think about. And then, periodically revisit it and try and increase that amount if you can. You know, um, this is one of those things, like when folks we talk about lifestyle creep, and somebody mentioned this earlier in the comments, that when we get a promotion, when we get a raise, we get a bonus, oftentimes we're thinking about like, oh, I can now afford to do X, Y, and Z. make sure one of those things is, oh, how much of this is going to go toward my emergency fund? Have I finished funding my emergency fund? Is this some money that can go to that? Okay. All right. So we talked about that. All right. I saw, I think Mary had a question about, yeah, what are the best tips when choosing a high yield savings account? Um, well, I think getting one, okay, first of all, my first tip about getting a high yield savings account is don't try and continually chase who's paying the highest interest rate. Like, once you have yourself set up somewhere, unless your bank for some reason stops increasing rates and everybody else has gone up 2%, like trying to chase uh the highest rate, that's more effort and more time, and remember, time is money. So I would look for somebody, one, that is FDIC insured or NDCU. Now here's the thing, a lot of the high yield savings accounts, a lot of them, like Ally included, they're kind of what I call internet banks, like they don't have brick and mortar locations. Does that a lot of them aren't technically even banks. They are fintech companies, which I don't say that to alarm anybody, but they have to partner with the bank. So I saw somebody made a comment about like, oh, with all the bank failures and all of that, uh, if you are concerned, you're like, I've never heard of this company before. That's quite possibly because it's a fintech financial technology company that has partnered with a bank. In their on their website, in their information, they have to tell you who the bank is they've partnered with. So you can do a few Googles just to find out, like, is this how's this bank been doing? Have they been involved in anything that would be untoward and who I wouldn't want to get involved with? But really, the other thing I look for is, are there like minimum balance requirements? Are there limits on the number of transactions that I can have in a month? Uh, do they accept the kind of deposits I want to make? I saw a post today where a lady was trying to find a high yield savings account that would let her deposit money orders because the ones that everybody was mentioning would not let her deposit money orders on their apps. Um, so I want to make sure that they take the kind of deposits that I'm probably going to make, that I want to know if there is a minimum balance required, a minimum deposit required, if there's a restriction on the number of transactions I can have. Um, and then the other thing, which is a lower concern, is um, like ATM access. If I need to get a hold of the cash, what ATM network are they a part of? Are there ATMs near me that I could use without paying a fee? Because y'all know I hate I hate paying fees. Kiva mentions, I know y'all hear the ambulance. This is what happens when you live across the street from a fire department. Marcus by Golden Sachs, they're putting 50, oh, you open one. I thought this said that they were giving away because some people chase the like sign up bonuses. Like I know for a while, Chase had a deal where they would give you a few $100s. Um, if you can maximize that sort of thing when you're opening an account, I think that's great. Do I think it's worth the time and effort to like be constantly tracking that stuff and trying to find a new one to move my money? No. Some of the HSYA, some of the high yield savings accounts will only give you that rate on like the first 1,000, the first $5,000. So that's something else you want to look at. You want to make sure that the rate that you are trying to get applies to like all of your money. So yeah. All right. Okay. So here's an example. Apple has a new savings account with 4.15% APR. Apple is not a bank. Okay, so they've partnered with a bank to be able to offer that. So you can do some Googles to find out who that bank is if you've got concerns about, what kind of situation that bank is in. Okay. All right. Carla is at Synchrony Bank, 4.15% high yield, and they have brick and mortar locations. Okay. All right. Yeah. Ally has 6 transactions. Yeah. It's I don't know if in that 6 transactions, I can't remember if that included deposits or if that was just withdrawals or transfers. But and I will give Ally credit. They let you know, like, this is transaction number 4 out of 6 for this month. So you don't get surprised unless you're reading. Okay. Right. Okay. All right. So, we've talked about auto transfers. Okay. Um, what are some other ways that you can find the money to start putting in that emergency fund? Because we've already discussed tonight that for a lot of folks, they're living check to check. There is no extra money. I think some of you who've been around for a while, y'all know what I'm going to say. Uh, do you have things at your house that you don't use? Are you planning a move abroad and need to start decluttering? There is money sitting in your house. Sell some of that stuff that you are not using. Sell some of that stuff that you are not using and take the proceeds and let that go straight into that emergency fund. Um, I have some clients who have a side hustle and they have made an agreement with themselves that, like, they were going to take all the money from the side hustle, direct it to the emergency fund until it was fully funded. um, Alexandria MD, if you got that tax refund, I go through this every year with my oldest child because me saying, "Hey, you shouldn't be giving back all this money," that's falling on deaf ears. So then I'm like, "But how about we take a chunk of this and fund your emergency fund, like, and then you'll be done, and then you'll be prepared in case anything happens." Um, so you can, if you want to get a side hustle, y'all know I struggle telling anybody to work more. But if it can be temporary, just to put that money over there. Um, there was, let's see, one of the things that stood out to me. Okay. Oh, I was like, why can't y'all see this? Okay. All right. So I already mentioned to y'all that I thought it was really interesting. It surprised me. Maybe it does not surprise y'all, but it surprised me that when faced with an expense, an unexpected expense, how people would pay it. I remember I told you the old number was $400. That's what was considered. They would put it on a credit card. Majority of people would do that. Um, that's an older survey. In this newer batch of data, if hit with a $1,000 expense for emergency room visit or car repair, you would 43% said they would pay out of their savings. 25% said that they would pay it with a credit card um, over time. And that just is so surprising to me. Um, I have had I have had, now notice the trend here. The percentage of people who would use a credit card and pay it off over time, not like I'm short right now, I'm going to have the money when I get my next check and then I'll pay off the credit card. No, they're talking about I'm just going to add that to my ongoing credit and I will pay it off over time. Notice how, the trend we're seeing. More and more people are opting to do that or would opt to do that. I'm a little concerned by that. Now, I don't think that this is a shocker that baby boomers would pay from their savings more than Gen Z, more than millennials, Gen X. We can look at it by income. Again, no shock there. But I did think it was interesting to look at it by gender, that men were more inclined to pay for that surprise expense out of their savings than women. Auntie Teresa, definitely not using my credit card. What I have found with some of my clients, they will give me the rundown of their finances and the amount of debt I mean, the amount of debt they have and what they have in savings. They have enough money in savings to pay off the debt. Or something comes up, like the last client I had who kind of made me want to talk about this with y'all tonight. She had money in her savings, which was an emergency fund. And she had talked about things had kept coming up. That's why she couldn't pay down her credit cards. And I was like, well, this most recent emergency, how did you pay for it? She said, I put it on the credit card. I said, "But you got this money right here in this savings account." And I think, and maybe this is a woman thing way of thinking, I don't know, but it's like I think a lot of people have internalized the idea, I'm supposed to have an emergency fund. I'm supposed to have money over there, but I'm never supposed to use it. And that is the whole purpose of having an emergency fund. You use it, then you replenish it. Because if you have to use the money in your emergency fund to pay for an emergency, the fund is doing its job. You are supposed to be able to use that money. It's okay to use the money in the emergency fund to pay for the emergency. Then you just build it up. I think there needs to be a little bit of a shift of a mindset. An emergency fund is not a static thing. I mean, like if everything were to go perfectly and nothing ever went wrong, then yes, it would be a static thing. But if nothing ever went wrong, would you even need the emergency fund? No. Okay. So let's make sure that we are comfortable with that. I used to be so caught up in getting my savings account up to a certain number that I felt bad using it, even though that's what it was for. I'm starting to see this and hear this more and more. So this idea that my emergency fund needs to stay at this amount, we got to ease up off of that. We need to think of saving for an emergency more as a process, an ongoing process, that if nothing happens, that money sits there on the case that something does. But this idea that I put the money there and I shouldn't touch it. No, you shouldn't touch it to go get your nails done or to buy a new purse. No, those are not emergencies. But your AC goes out, hell yeah, spend that money. That's what it's for. That's what it's for. And you are right, Alexandria. It is hard, but I think this is part of us rethinking some of our beliefs about that money and about money in general. Like I said, if you've got to tap into it to pay for an emergency, not like a shopping emergency, but a real life emergency, then the money is doing what it was supposed to do. You built it up before, you'll build it up again. That's what's supposed to happen. I wish people would have a similar attitude about credit card debt, like, "Oh, I got my credit card down to 0, let me keep it at 0." But in my experience, people haven't had that same kind of attitude, at least not the folks that come talk to me. Okay. Mm, okay. Debt to income ratio can be a rude awakening or a wake up call. True. Use the money. Absolutely. That is why it is there for you to use. It's sort of like, and I used to be guilty of this, people who won't use their health insurance benefits. Like, you've been paying for the health insurance. That's why you have it. So in case you need to go to the doctor, you need to have a procedure done, you can use, like, that's what it's for. It's, I mean, maybe that would be helpful if we thought about emergency funds as sort of a step insurance kind of a thing. I don't know, but that's a mindset I wanna see change. Okay. How about using the credit card to pay for the emergency, then pay off the credit card out of the emergency fund, as long as you don't forget to pay the balance before the due date? Absolutely. Absolutely. This is why I said that statistic was odd to me, or it surprised me, because what that data was saying is that this was not what people were planning to do. They were planning to pay it off a little bit at a time over a long period of time. Um, Credit cards can be a part of your emergency fund strategy, and very much in the way that Valerina just mentioned, especially if your emergency funds, like you have the emergency fund in a separate bank account. You've made it hard for you to be able to access accounts so you don't spend it. But then when it's time that you do need to get to it, you can't find the damn ATM card. So you've got to transfer the money over. Y'all know sometimes a bank to bank transfer can take a few days, especially when it's two separate institutions. So, the plumber has to be paid right now. It's perfectly acceptable to pay the plumber today with the credit card. Soon as that transfer hits your account, pay the credit card. So no, that a credit card does have a place in emergency fund strategy, but not carrying a balance. It is paying it off immediately. Say number one reason to have an emergency fund is to make sure no emergencies come up. When you don't have the money, everything in the world goes wrong. Ain't that the truth? Ain't that the truth? Okay, let's see. Okay, Kim. I love you. You speaking my language right here. I don't put more than I can afford to pay in a full month on my credit card. If I can't afford it, I don't buy it. Y'all, I have been saying this. If you are in a situation where doing your regular monthly spending, you have to use the card. You cannot, it's not, "Oh, I'm choosing to use this credit card because I get points, I get miles, whatever." It is, "If I can't put this on this credit card, I can't eat this month." That means you are living above your means. What you're saying is, "I have to take out a loan to buy groceries." And that's not how we trying to live. So, and I'm guilty of this at several points in my life. Putting things on a credit card is sometimes like you're not spending real money. There is something you feel when you got to pull that cash out of your wallet and pay for something versus just swiping your card, tapping your card, what have you. Practically, how much is the recommended percent to put for an emergency fund? Um, that depends on your situation and what your inflow outflow of cash looks like on a monthly basis. The goal is somewhere between 3 to 6 months of your expenses. So let's say, and that can be a very daunting number. So let's say you do the math and you get this big, you're like, okay, I can't do 6 months. I'm gonna try and do 3 months. You do the math and you still get a number that you feel is very big. Okay. Do your peanut butter and jelly, your ramen noodle, your beans and weenies budget. Aim for 3 months of that. Once you get that set aside, reevaluate. And what would 3 months of your regular life budget look like? Your regular expenses, living how you want to live. What would 3 months of that look like? Okay, aim for that. So how much is a percentage per week for the emergency fund? That's hard to say. Now, if we're talking about how much should you be saving and investing in general out of, all the money you get in a month, that should be like 20%. So here's the thing, this conversation we're having tonight is specifically about emergency funds. We haven't even tapped into like, you should be saving for, you got to pay car insurance every 6 months. You're going to have to pay the property taxes in December. You know that you're going to need to replace the washer soon. That can be in that 20% along with the money that needs to go to your IRA or what have you. Tonight, we are talking specifically about an emergency fund, not the general kind of saving that you would need to do. I will also say, and this is not me, this comes from Paula Pant. Um, it is often hard to start saving if you're not in the habit of doing it. And so she talks about 1% tweaks. So I just told y'all you're supposed to be saving at minimum 20%. And some of y'all are like, what, girl? I'm in the negative every month. Okay, start with 1%. 1% of what you bring home, put that to the side. Next month, bump it up to 2%. Next month, bump it up to 3%. And those little increments until you get to where you're trying to be. Like I said, uh I can't take credit for that. Okay, I hadn't thought about this. Tamra? Tamra? I hadn't thought about this because I don't have two accounts that do Zelle, but you are correct. If you have money in two different accounts and both of those institutions do Zelle, you can Zelle the money over and it won't take as long to transfer. I hadn't thought about that. I do this. Every time I charge something to my credit card, I write it down like I paid cash, so I always know how much money I really have, so on and so forth. Exactly. And I have also there was there was a point in my life where I'm not gonna say like I didn't I think compared to most Americans, I didn't have a lot of credit card debt, but for me and my little itty bitty salary, I had a lot of credit card debt. And what I started doing was when I would charge something, I would immediately then pay the credit card because I know it's easy to let things add up. And then at the end of the month, you're like, oh, damn, I didn't realize I spent that much. Um, and that way the money would immediately come out of my bank account. So I couldn't, try and count that money more than once. And if you are concerned about your credit score and keeping your credit utilization low, it helps with that. There's no rule about how many times you can pay your credit card bill in a month or how often, how many times. Now, there are credit cards that will not let you pay more than you owe, But so I got in the habit of every time I put something on the card, I send a payment that day. Okay. All right. Luxury Vagabond said I could only do 3 months for now, but I'm good with that. I can always trim the budget if I had to stretch it more. That's great. All right. See. I pay my credit 1 to 2 times a week. I wanna keep my utilization down. So, if you are in a situation where you wanna keep your utilization down, you're getting ready to, apply for a loan, a mortgage in particular, you definitely wanna be paying your credit card as often as you can to keep that number low. Okay. All right. Let's see. Were there any more questions? Think we answered those. Let's see in my okay. Did we hit everything in my notes? We talked about why you need an emergency fund, best practices, setting one up at a separate bank, figuring out how much you need based off of how you're living your life. Um, and in order to do that, I think sometimes that makes us kind of oftentimes I found talking to clients, a lot of people have no clue, like, what am I spending each month in order for them to even determine how much money should be going into an emergency fund to cover those expenses if something came up. We talked about making it a bill, doing automatic transfers. It's okay to start with a small amount. It takes time. We also talked about the fact that um, if you have an emergency, it's okay to use your emergency fund. That is what the money is for. Um, let's see. Will you speak more about your fire journey? I didn't think anybody wanted to know. And then was it one of the more recent videos, there were a couple of people that were like, "Are you gonna talk about this?" So I don't know. Is this something y'all are interested in? I don't have a flashy, like, I worked my six-figure job and I ate bologna sandwiches and that's how I could retire at 35. I don't have that kind of story. So I often think nobody wants to hear how I did it because it wasn't sexy. It wasn't exciting. But if that's something y'all are curious about, if that's something y'all are curious about, we talk about it. Not today, but we could talk about it maybe next week. This is also a very good habit of actually checking your credit card statements and making sure that they line up with what you've actually charged, especially in the world we live in now with all of these data breaches. All right, so I guess y'all are curious. So yeah, we can talk about it. Um, If and then after we do it and y'all are like, "Oh my gosh, this is the most boring story ever." I'm gonna be like, "See, I told y'all." Oh, okay. I've not heard a regular fire story, so that would actually be very helpful. Okay. All right. Janella said, "Yep, we nosy." Okay, so yeah, we can talk about that. Maybe next week, maybe the week after, what have you. Okay. So I think we've done it. I think we talked about what I wanted to talk about. And I think the thing that I want to make sure um, we leave on is kind of like circling back to the very first slide we looked at where we 59% of US consumers are living check to check. That I think the thing I want to make sure we end this conversation on is just because the financial situation you may find yourself in right now is not great doesn't mean that's where you have to stay. And it's perfectly acceptable. It's perfectly okay if your path to getting you where you want to be financially is super small, tiny Barbie steps, smaller than baby steps, Barbie steps. Y'all know how little Barbie feet are. Like I kid you not. It is perfectly okay if it's like all I can do is put $5, $10, $20. That's okay because whatever the money is that you have set aside, that is money you do not have to go into debt behind. Okay. Um, so it's okay to start slow. It's okay to start small. What's really, really important is that you start. So if there is somebody here tonight or somebody watching this on the replay and you know that if you were hit with a $400, a $1,000, a $1,400 expense, if you know that you couldn't pay for that, that means you don't have an emergency saving. You don't have emergency fund. You don't have no oh shit money. So you got to start. You've got to create that. Start small. Start today. That's that's what I'm leaving y'all with. Um, before I get out of here, because y'all know I am horrible about these things. If this conversation, you were listening to this and you were like, yeah, see, I need more of this. I need more of this financial basics kind of stuff. Remember that the Financial Confidence Academy is getting the wait list is up. You can go to do I have a little thing here? I thought I did. And I don't. Financialconfidenceacademy.com. I thought I had a uh little banner, but I don't apparently. I need to make one of those. Financialconfidenceacademy.com 6 months program, and it teaches you all the money stuff you wish you would have learned in school that they did not teach you in school. Okay? uh in this kind of style, so not like bookish but practical. So if this conversation like opened up some thoughts for you and you're like, yeah, I need more of that, you definitely want to check out the Financial Confidence Academy. Go to financialconfidenceacademy.com, get on the wait list. You'll find out when doors are open. Thank y'all for coming to hang out. The Picky Girl Nation is awesome. I love all of the sharing and the caring that's happening in the chat. And I will see y'all later. Bye bye.